All right. Hello, Karl. How are you today?
I'm well, thank you.
Yeah. So we do not know much about your fund. I'm sure it's a very prominent investment, an investment vehicle in the East Coast, but we would like you to say a few words to our audience about your profile. What is the field, the geography of your investments? Anything you want to tell us? Just take a couple minutes and introduce yourself.
Sure. I mean, there's definitely a lot to share, but we can break it up into different pieces. So I'm with a fund called M13. We're actually headquartered in Los Angeles. We have offices in New York as well. And we do most of our business between California and New York, but we do have some investment across different parts of the US as well. We have a couple of investments in Europe, but mainly in companies that actually are looking to launch and grow in the US market, because that's the market that we know. So we are a $180 million fund. We or $190 million fund actually, but we closed at 190. So we basically do Series A, seed, and Series A investments. Generally, our core investments range in value from $2 to $7 million as a initial check. We do have a feeder program where we make investments that average around $500,000 in earlier stage companies that we're actually excited about. The team are excited.
But looks like you cover all the geographies and the stages from seed to Series A. Are there any industries you are interested in more than others, or like what would be your investment criteria?
Yeah, so we generally invest in consumer technology. The thesis that we follow is we believe in technology is changing consumer behavior over the next 10 years. And so we think about the technologies that are driving those changes, and we look to make investments in those technologies or in the businesses that feed off those technologies. So consumer technology is the basic category, but we do some adjacencies, either businesses that feed into a consumer marketplace or provide services for businesses that are feeding into a consumer marketplace, or even businesses that are providing value to employees but sell through the B2B market themselves. So things that ultimately have an impact on an end consumer, but adjacencies support that as well.
Oh, it's an interesting field to do. Yeah. But I would.
I'm sorry. So the categories that we really focus on. I mean, if you think about the pocketbook and where people spend their money. It ranges everything from wellness to communications, specifically voice is an area that we're very interested in, to even, across, to health, wellness, things like that, and even across to the workplace, how people actually consume services and value in the workplace as well. So a lot of different components, mobility, a lot of different components in that range.
Is that something that has changed since March, or is that the profile of your fund you've been following throughout? Because what you're describing is something that is very important right now, and that was in the last 6 months when the consumers and the companies are trying to switch to different platforms, and the well-being of an individual is becoming more and more important in this changing environment. So how did you know to get into that field? Did you do it before the pandemics, during, or like?
Yeah, we started investing this fund in early 2019. And to be honest with you, it's been that thesis from day one. We've never changed the thesis. If we look at the categories of investments we've made and we look across our portfolio, we've only had maybe one company or up to two companies that I would say have been really negatively affected by COVID. We still think that those companies have an opportunity to see it through, because we think there's another, on the other side, they'll still do very well. But none of the other companies really are impacted by COVID. If anything, a lot of them were promoted and kind of became more important during the COVID era. So I think we've been somewhat lucky. I don't think we could ever say that anybody predicted what we would go through in 2020, but our investments have been, very, very performant in this period. So we've been lucky that we've been able to do that. One thing that we do, the big differentiator for our firm, honestly, is, we're not a traditional just venture firm. We don't just have investment partners and go out there and just make these investments. I think one of the key things that really differentiates us and why founders love us, why LPs really find value in us, is what we've done is we've actually invested outside of fund management fees. We've invested in building an operating team within our organization. So we have a whole backbench of pretty senior executives that come from, a lot of experienced growth companies and the like. And that operating team essentially works hand in hand with our portfolio, works with the founders and helps them navigate their businesses and navigate the growth in their businesses. So we focus on, a multitude of pillars that are oriented around, either driving growth through things like brand development, acquisition, distribution, data, all the things related to growth, as well as managing that growth through either product development, operations, talent, finance. And so we have experts that have done that extensively over the last 20 years of their careers, and they work hand in hand, they're partners in the organization, they work hand in hand with our founders. And so what we found that as we hit COVID and we started seeing a lot of the issues that we had all experienced before, either in 2008 or even for some of us back in 2000, we were able to help the founders really navigate that and really strategically deal with those situations. And as a result, I think that's really helped us optimize the performance of our portfolio during that period. And for LPs, what's exciting about it is that we are adding a whole bunch more value into every company that we invest in. So the likelihood of success and potentially the value that we create out of those businesses theoretically should be greater than that of our comparable VCs that don't necessarily have this level of service or level of support that they provide to their founding teams.
Often people ask to define what is the smart money. Everybody is saying that that's the basic difference in the venture capital from other formats, right? It's not that you took a loan at the bank. What you're describing is beyond, I would say, even taking a board seat. Now, do your partners or members of your team actually go inside the company and take a position, or is it they still just a board member and that's how they contribute? How does it work?
Yeah, so we don't go the whole way to PE, so we're not embedding ourselves in that way, but we're definitely taking a stretch from where venture has been historically. So what we call it is, we call it a venture engine. The idea of it is that we're providing a bunch of propulsion fuel to help these companies. So what we pride ourselves in is everybody in the team knows the situation and the state of every company in the portfolio at all times. We meet on a weekly basis, we discuss the full portfolio, we talk strategically about exactly what all the companies are going through. The board members and the lead investors are the people that are the direct conduit into those companies. But what we do is we proactively identify when a company is either coming up with an issue or has something around the corner or potentially is dealing with something that we might understand that they don't. And having been a founder myself for 20 plus years, founder and operator for 20 plus years, I've been through a lot of situations where I've wasted 6 months or a year of a business's life focused on an issue that I could have solved in a month or two, simply because I didn't have the resources or the expertise or the knowledge to fix the problem and to get past the problem. And so what we find is all founders deal with that same issue. All founders have gaps in their knowledge or a lack of resources or something that limits their ability to solve these problems. So we identify and proactively go in and work with them on particular situations, on particular projects, on particular strategies to try and help them essentially make better day-to-day decisions, drive better strategies, and then on top of that, obviously use the influence in the network that we have to give them more ammunition to actually build their businesses and grow their businesses.
So when you look at the company and you are making your investment decision, you really do not care if they have a complete team in place. If you can offer...
That's not necessarily true. I would argue that at seed and Series A, no company has a full team in place. I think that's inevitable. But we're not looking for that. We're not looking for situations where we can be helpful because we know that the value we can provide pretty much exists across all businesses at this stage of their development. But we do look at the founding team and how the ability for us to work with them. We do focus on making sure that if we're going to get into a marriage with a founding team for the next 5 or 10 years, that we can actively work and we can actively be helpful. We can actually put our resources in play. You know, there's always going to be some founding teams that don't feel like they want help, don't feel like they need help, really want to be left alone. And we're not going to get in their way, but ultimately, if they, you know, if they see no value in what we can provide, then it limits our ability to increase the likelihood of success for their businesses. And as such, it doesn't fit into our natural model. But I wouldn't say that we filter for that. I just think it's an inherent part of how we assess companies. You know, do we think the founders, can we work with them? Do we get along with them? You know, and the founders should want to do the same thing with their investors. They should be asking the same questions with their investors. And so I think building that relationship with founders, even ahead of investment, is just an important component for both sides in making sure that you're creating a marriage that can last and be happy.
Well, yeah. You do it online now. That, I mean, we are doing it online, period. But evaluating a team just through a screen, have you figured out how to switch to that format? And
yeah, that's tough. That's tough. I mean, we've often, in most cases, I think to date, where we've made investments since COVID started, we've figured out some way to walk and talk. We've figured out some, you know, socially distanced way to connect and meet with the team. The one big difference is obviously traditionally we would bring a whole team, you know, the team in to give a presentation to our whole investment group, and we would all kind of get that FaceTime with them. Now we're really relying more on the lead partner and the lead, you know, the lead investment group, the team, the 2 or 3 people who are running the deal, to focus on, you know, creating those relationships and connecting. But I think people have found, you know, new ways to connect online and to create relationships through Zoom. I do think that that's evolved. I think the acceptance for that has grown since COVID started. It'd be very interesting to see how that evolves as COVID goes away. I do still think that every time I've had a face-to-face meeting, the value of that meeting is accentuated significantly because of the situation we're in and the likely, you know, the minimal number of those meetings that take place. So I do still think that there's huge value in meeting face-to-face, and I think we'll always try and do that where we can. But we do have to rely on digital communications a lot more than we used to, that's for sure.
yeah, that's what I've discovered too. You know, even when we're doing due diligence before, it's still you did a lot of stuff online and on the phone. But when it comes to evaluating the team dynamics, the founder's ability to listen to your guidance, it's usually done better in person. But it is what it is. And I think some of it will stay and some of it, because there are certain meetings that you don't want to be traveling across the country, across the world, when you can do it like this. But some meetings, yeah, I think we will figure out a way to continue to have this social element to it, because as you said yourself, that it's a partnership. And in a partnership, you evaluate all kinds of ingredients. Yeah, so you evaluate the team, and then what would be 2 other, for you, the most important indicators that this company could become a fit and be your portfolio company? So the team, what else?
Yeah, I mean, depending on the stage in which we're investing and the valuations we're looking at, you know, things like product market fit, you know, have different degrees of importance for us. We generally, you know, want to believe in the business model. I think that's probably the first thing, and more so than just, you know, do we think a product can sell or a service is valuable, but more so around, do the economics work? Is there scale behind this? Have they got the ability to expand? What's the size of the TAM? You know, just the whole, you know, do we see a business that can have an outsized return, like from a category standpoint? So that's one of the main things that we assess against. And then I think if you want to point to another one, you know, it is going to be the level of validation. Again, it doesn't need to be complete product market fit, but even if it's a, you know, early stage alpha or beta product, have they got any kind of validation of the need for the product or the engagement around the product or anything that tells us that the product has, you know, a viable place in the market? And so those are, you know, then you got a lot of cursory considerations. You know, what is the category? what is the historical value associated to that category, what's the geography, what does the customer look like, how accessible are they, is it ethical, like a lot of cursory things that we consider. But I would say the main things are going to be the business model and the level of validation that they've achieved to date on what it is that they're building.
Well, the US West and East Coast, that is something that, yeah, obviously, what that the funds do. But you also mentioned your office in London. Which geographies do you cover via London?
Not in London, no. Our offices are in Los Angeles and New York.
Oh.
So we cover California, East Coast,
just
and West Coast. We've made a couple of investments for European companies, but only after they've established kind of a Delaware Corp and they've actually set up for distribution into the US. Our real area of expertise is growth within the US, and so that's where we're focused in terms of our investments in this fund.
Okay, so you do work with companies where maybe the idea originated outside the US and they developed whatever they had up to a certain point, but then they needed to move. Now, have they moved the whole company, or did their R&D center stay?
Yeah, no, the companies we're talking about, I mean, one of them specifically, I'll name, it's a company called Bunch.ai. It's a kind of AI management coach. Really, really smart application, just launching now and just getting incredible traction in the early days, really great product. They're based out of Berlin. All of their development, everything takes place out of Berlin. The category of product is obviously just a much better fit for the US market. I just think the acceptance of coaching, the acceptance, the need for coaching and with millennial managers, it's very, very apt for the US market. I'm not sure how ready the European market is for that kind of offering. But the real focus for them is they set up a Delaware Corp, set up a New York kind of hub to distribute from, continue to do all the product development and all the engineering out of Germany, out of Berlin, but ultimately are looking to the US to really do all of their go-to-market motions and all their activities. And so we're really excited about how they can enter into the US workplace and get to US consumers. And so that's where we found excitement. We don't really have as much insight as to how the European market would react to this. And that wasn't really in our consideration set. We really focused on how would the US utilize this product.
Yeah, that's usually the case when you say to a company founder, if you want to be a global player, you need to be in the US market, because you can build your company to a certain point and wherever you started. But once you get into this global play, you have to become a US company. And
yeah, it's a great launching pad for global businesses, that's for sure. It's much harder to build global from a startup in Europe. And usually if startup in Europe wants to go global, they'll go to the US and create their hub in the US first. And from there, then kind of launch out into Asia and South America and other places.
Right, right. When you say a market fit, so what comes first? Do you identify a big market first and then look for companies in that market? Or do you meet a company you really like and then you figure out if they can either penetrate the big segment of the market or they actually might even create their own? So what comes first?
Yeah, I think the first thing is to understand the categories in which we find interesting. So where are the trends, macro trends? We're not going into specific solutions and trying to find businesses that solve those problems. We look for general trends. So for example, with communications, voice is a general trend. We know that with the AirPods, they are advancing a certain technology and a way for people to receive information. And so voice delivery of that information, whether it's for entertainment, whether it's for communication, whether it's for gaming or navigation or other things, that technology is something that we know is being adopted more and more because other supporting technologies are supporting delivery of that directly into the ear. So what do? We go out and we say, hey, we like voice. We identify all the different types of businesses and companies that are building in voice, because the most exciting thing for us is where somebody is actually breaking new ground. Oh, we're solving this problem with voice in a way that we never thought could be solved with voice. And suddenly we're like, oh, wow, you're creating something in the lane that we love, but it's something that's very novel, unique, and something that actually has a differentiation. We can really see the value of it. So once we identify the swim lanes, the big swim lanes, it's really about going out into the market and figuring out what companies are out there that are playing in those swim lanes, and hopefully finding things that surprise us. Anything that you and I can think of right now and just say, oh, well, voice would be great for X, there's probably 5 companies trying to do that.
Right.
But when you go out there and you start seeing, oh, you're going to use voice to deliver information in this unique way, I haven't seen many people do that. That's interesting. That's a novel way of approaching the problem. And that's where we actually find, a lot more excitement.
Huh. Yep, that makes sense. So my final question, how do people find you? Be it an investor or an entrepreneur, how do they find you?
So our website is m13.co, that's m13.co. My personal email is Karl, K-A-R-L, at m13.co. Just reach out to us. You can either come through the website, come through LinkedIn, come through email. We commit to looking at everything that comes in. Obviously, we get thousands of businesses submitted to us, so we really tend to be quite restrained in terms of the amount that we take forward to the next step. We are pretty diligent about reviewing that, but we do commit to looking at everything that comes in. So if there's if there are businesses or opportunities that people want to present in front of us, we're happy to see them. Try and connect with us, and hopefully, if it's an exciting business, we'll definitely want to talk with you and develop that. And then from the LP side of things, again, just reach out to us if the model that we have makes sense. We're going to start raising our Fund 3 in Q1, and so we're actively talking to institutions and LPs around participating in our next fund, and we're seeing real success in Fund 2. Fund 1 was already a very, very high performing fund, so we've got a pretty good track record and looking to build a pretty strong fund to continue investing and pursuing our model in the market.
That's perfect. Well, thank you so much for your time. It was a pleasure, and we will be in touch, and Natalie will follow up, and hopefully one day we'll see each other in person.
Yeah.
But for now, we'll have online meetings. Well, thank you, Karl, so much, and have a wonderful day. Bye.
Thank you so much, Sasha. I appreciate it. Bye-bye.